Welcome to Ownership, the podcast where we have conversations about capital formation in crypto and beyond. I'm your host, 8-Bit Penis, and this is Season 1, Episode 1. And today I'm joined by Anas. Anas? How do you pronounce that even?
The second one was right, Anas. Yeah, it's easy
Anas,
actually.
okay. Cool. So Anas is joining us from FlashTrade. This is the first episode of Ownership, so I'm very excited about it. And I think Flash is probably the perfect candidate to talk about ownership coins because they have recently converted to an ownership coin from just a regular futarchy controlled token. Flash is a perps product on Solana. And yeah, I don't want to waste any more time. So let's get right into the conversation. So, Anas, how was FlashTrade before TGE? So how did you get funding? What was the process like? How did the bootstrapping go? And sort of when was that even?
Yep. So it all started with this dream of making an exchange that is fully permissionless and capable of handling trillions of dollars of volume, because the total available market is actually more than $10 trillion. So the idea was to make sure things are built right from the beginning, and it all started right after the crash of FTX. And the most interesting part was, like we didn't had that lot of money amongst the co-founders, and we had this amazing skill set to build anything on Solana. We knew that. So our whole idea just went to towards building an exchange, because that's like the end game of decentralized finance, to be honest. Like building a fully decentralized exchange is like where you can trade perps, spot, and people can market make, is like the end game of DeFi. So we started building in 2023 and basically launched in December of 2023. And since we were bootstrapped, we didn't have any backing, and we needed some money in the pool to make sure the market making activity and the volumes can be done. So what we did is, like, during that era, NFTs were hot, and we were like, okay, since there is money in there, we basically pivoted our model from launching with the token to launching with an NFT. And then we were fortunate enough to be in touch with folks at Tensor, and then went ahead to do a very interesting launchpad thing with Tensor, where we raised about $1.2 million to bootstrap the protocol's liquidity, which was like POL. And what we essentially put out at that time was like, any money that the protocol on liquidity makes, it will be given back 100% to the people who bought that NFT. And in that fashion, we actually gave back about 110% of money to the people who invested into bootstrapping the POL. So yeah, that's how we started FlashTrade, by the bootstrap capital. And yeah.
Okay, that's actually very interesting. I don't think I know about anybody else who's done it via like an NFT sale. So how did that transition into like TGE? Because I remember it had some sort of part to play when you guys and also how did that affect your outlook before TGE on how did the runway go? Were you guys worried, like, is this money gonna run out? What was the mindset there?
Yep. See, overall, like it all comes down to the passion of builders. Like, if you really want to build something that is gonna scale to be a very big thing, it drives you a lot. And eventually, we focus a lot on making things happen with less amount of money. We essentially learn the skills by ourselves. Like back in the day, I remember, like, a couple of our co-founders, we literally learned how to do things on AWS, and then how to make things on Solana itself. We didn't hire like this huge guys with big packages, but we basically upskilled ourselves, which essentially helped us to run faster overall. And then the biggest hurdle when you're building thing is not building it, it's maintaining. So I think that's how we were able to maintain it throughout. But overall, like in terms of raw numbers, FlashTrade in its journey of 2 years, it has made more than around $4.5 million. That is pure revenue. So that's something that a lot of companies basically sell their company for about 15 to 20% to raise that much money. But we didn't sell anything. We just put out a product that was working very well, and people were making money, and people were trading against it, and people were helping. So that is the idea fundamentally, to make a product that creates enough revenue that you can run things, and then you can start aiming to become number one in that segment. But overall, like, we never had this thought about like what if money runs out, because we were passionate enough, and we knew what we were betting on, because and building an exchange is very important. It's sort of an holy goal, to be honest, in DeFi. It's like stablecoin is one of the holy goals, and running making a fully decentralized exchange is a holy goal of these DeFi. So yeah, that's the thing about Runway overall.
Yeah, I mean, I love to hear that. That's actually a very cool answer. But then you didn't have any venture capital, right? So
No.
at any point did you think about it? Have you thought about it? And why not go the traditional route? What is it that you think would have held you back with a maybe if you had a big VC raise?
Yep. Essentially, we were reached out by a lot of funds, to be honest. Like, we did get very interesting DMs, but the terms were really not aligned. And I've been in crypto for more than 9 years now. It's my 10th year, and I've seen the VC rounds play out, because the sad part about crypto is people play over shorter cycle time terms. Like, their mindsets are set over smaller time frames. But if you are building in finance, you have to look on a bigger horizon. And the sad part is what I've noticed, being part of the whole trenches, as well as like even the VCs are short-sighted. They want to get out as soon as their vesting is over. They want to sell it. They want to make their LPs happy. But if you look at any tech company or any big companies, it actually takes quite a bit of time. Like, it does not take 2 years or 3 years to build a business that has a very big moat. It takes about 5 to 6 years. In some places, it has taken more than 10 years as well. So diluting ourselves in such early stage with people who are short-sighted, we didn't like that. And since we were essentially making money from running in the exchange, see, every move that we took, we basically took just to make sure we make more revenue. Like, all our moves, all our features are basically targeted towards making more money. So that's what kept us, not like dry out from money that we are basically spending to run the exchange. So yeah, in many ways, being on Solana also helped us a lot, because there is so many new participants coming. The chain is fast. The chain is capable of attracting more people. Solana itself, the brand has grown a lot. So I think that has helped us a lot as well to attract more new users and generate more fees for the LPs and for the team as well.
So was it like, did you plan a token the first day? Like when you launched the NFT, was the token planned, or
Yeah.
was that something that came after that? And why did you want to go the token route? Like, a lot of people are afraid of going the token route because they're like, oh my God, we're going to have some angry holders who are going to scream at us. So I'm really curious about your thoughts.
The token route was in our mind since day one, since Flash was being built. And we took this decision internally that because at that time NFTs were hot, we did NFTs. And then the idea was, like, it's very interesting historically. Like, the points program was actually launched into production by MarginFi. Before that, no one did this points thing. Okay, it was like no one did it. But during that time when we were behind the scenes working, we were literally building a points program that was tied to the NFTs. And since we, like we have a knack for building new mechanisms and try it out in prod. So essentially these NFTs were receipts which gave you points which were eventually be replaced by tokens when we do the TGE. And that's why since day one, even we promised that to our NFT holders that like there will be a conversion time. And our goal was to make sure we first fulfill the rights where we raised 1.2 million. We wanted to give back that money. And we reached that goal in less than 13 months or something like that. And then it took us a month or two to basically come up with a very sophisticated token economics that we see now FAF is live with, that it's capable of handling itself and not just going to zero as we see with most of the VC backed tokens. There is some value to it, but I know the market cap is down, but there is value to it, and if we are able to scale the tech behind it, it will drag itself towards upwards. So TGE was always in our minds since we are crypto natives. Like I have no background in traditional finance. All my background started in DeFi. I know finance that is from the DeFi perspective. So we always wanted to do a token because token is something that essentially helps us to bring on more people, align more people to grow bigger. But I know there are nuances where we have some issues with angry holders and stuff. And that is the reason where we have to work towards. Like you can't put down your shield and say, okay, token is a bad thing, we should not do a token, because we are in DeFi and we are into experimentation. This is a new form of finance and it needs to be done in a much democratized way than what we have out.
I think that's actually a perfect segue, the topic of democracy and then governance, into, okay, so you did a token and you've been using futarchy for it through MetaDAO. I am curious on why go that route. Like, why have governance at all? Why not just do a token and then nothing with it, like some other people do? What was the tokenomics plan? Like, was it always going to be a governance-ish token, or
See, what I would say is like there are certain times in a lifetime of a startup that you need some outside help, and people who are aligned with you need to get answers on what the future can be. Like overall, I don't think we need governance for everything. There are certain aspects of a startup or a company that needs a broader decision making, and that's where we were looking to the models, and token based voting didn't suit us. I don't think it suits anyone, because since the tokens can be bought off and things can be manipulated, and since team can have a lot of tokens held by themselves, the voting is not true when you are doing it by a token based voting, and it does not reflect into the price of token. Imagine you are doing a very great proposal that's going to change things. It does not reflect into the price, and essentially things can be like the outcomes can be manipulatable when you are doing a token based voting. But when you're doing a futarchy based voting where people can basically read the proposal, like anyone around the world can read the proposal, can understand what the company is doing, and if they are aligned or misaligned with that thing, they can essentially come and make money by betting on that decision, which is a superior governance model, because it essentially acts as a guardrail where, if I wanted to rug FlashTrade, I cannot rug it, because there will be always money coming in who knows what is valuable and what is not, and will try to make money based off that decision and not allow me to rug it. But if we were to do token based voting, where I essentially as a team, or if I am a guy who has a lot of money, I can buy that much amount of tokens and sway things in my favor. But you can do that in futarchy, but you will always find another whale or another guy who might have bigger bags or have a different alignment, and you can see that crash out in the markets, and it's very, very interesting to watch actually.
Okay, so you're really into futarchy. So it wasn't just an accidental decision of riding the hype. I think before you guys,
Yeah, you need to go back there. Like the interesting thing
yeah,
is, before MetaDAO was launched, I essentially met the founder of MetaDAO, and we had intense discussion of why futarchy is actually better than the token-based market voting that we have. And we actually spent a day together in Malaysia, when they had their offices there. So that actually helped me a lot to understand, okay, where I might be wrong. So yeah, that is like the backstory.
yeah. I want to know a little bit more about that, because I always wonder how Profit and Colon ownership coin pill or futarchy pill people. So what was the conversation like? Were you going in skeptical, or were you just going into it
I was
like,
the biggest skeptic of their mechanism, and I was like, this is not gonna work, and I seriously don't believe in this. That was my first answer, to be honest, because I was not able to understand it when he was explaining. And the problem is, when you try to explain it, it's very hard to put it in one way. But unless you understand from the perspective of governance and you have the insight, that's when things click, and you essentially understand that, okay, this might work. Because we already knew that the token based voting was not working very well. I was a prominent member of Mango DAO. Mango was one of the biggest perpetuals exchange of Solana, and even part decentralized finance, because they were the first ones to do a cross margined order book exchange fully on chain. No one did before them. So I was part of that community, and we used to do token based voting through Realms DAO, and we did see the shortcomings of token based voting when we were trying to sway things. So had that experience before, and when I discussed what futarchy is, it kind of started making sense, because when you have something that is very valuable, you need to make sure the governance is done right.
okay, and so you started off with futarchy governance, and so just recently, I think it was yesterday or maybe a couple days ago, but you've already been hinting at it like since weeks of becoming an ownership coin. So why did you do it, and what difference does it make for you to become an ownership coin and not just a protocol governed by futarchy?
For sure. See, one interesting thing that a lot of people might take it as a different direction is, like, at Flash, we do things that make more sense for us than others. That is what we do a lot of times. So essentially, the ownership thing that we did is like more of a better legal structure for FlashTrade than we had before, because the legal structure that we had before was between the ownership was spent between the co-founders. So it was like we were legally backing the exchange, which was not so safe when the exchange becomes a bigger thing than it is right now. So we wanted a better model, a better foundation that pays the bills and all that stuff. So eventually, when you have a foundation that represents thousands of people, it's much more decentralized, and it's much more future proof when things become bigger than when you have a foundation that is owned by a couple of people and who could do anything at their will. Like, even though we have been, like, the co-founders, we've been together since our school days, like, things can change, like human emotions change. But if you have a foundation that represents all the FAF holders, things cannot change that fast, and things are much more cemented. So that is the main reason why we moved to the ownership structure, because legally, as an exchange, it makes a lot of sense to have that sort of structure behind the scene than what we had.
So do you think that a startup should be decentralized? I think that's one of the things that I've been thinking about.
There is a
Is like
catch here.
should it? Yeah, yeah.
There is a catch here. So see, you also have to understand that the way we have made our structure, the proposals can only be put up by us. Like no token holder can go ahead and put up a proposal and do the futarchy vote at Flash's futarchy setup. And this is something that I took inspiration from the way Google is set up. If you check the way their governance is set up, the founders, Larry Page and Sergey Brin, they basically have full governance control over any voting that happens. And that's how they have scaled Google. And for us, like I thought the same direction, that since we build this exchange from ground zero, we know more about it than anyone else. So I don't believe in full like having a full decentralized system, but there are parts where you can use and make things much better. Because if you do a full decentralized structure, you will never move anywhere. You can see that with the Bitcoin development right now. And even if you read about the history of Python, it would be very interesting, because Python is all, like until 2 years before, it was all governed by the single guy who was the founder of Python. So, and it's the most used exchange language today. So yeah, so you need to study more, interesting foundations that are outside, and then take inspirations from them and build a future-proof mechanism for your company overall.
Yeah, I mean, I think it's a very interesting setup, what you have with Flash, because it's definitely a lot, like, very different. So, and I also, correct me if I'm wrong, I believe the treasury is also set up in a different way.
Yes.
Although, so could you maybe give us a TLDR of what the difference is between a regular ownership coin, or like the ones that were launched through the ICO? I don't know how much you know about them. I presume probably enough.
Yes. Yes.
And
So,
the setup that that Flash has.
yeah. If you check the normal ICO structures, they sold their company to raise money. We didn't sell any part of Flash till now. What we have done is we have bootstrapped the exchange, we gave back that money, and we made money from it. So we never sold any part of Flash to make any money. We ran a product which makes money, and we essentially kept that part of money for ourselves. And then when the token happened, we added a value back to the token by giving everyone who stakes FAF 50% revenue. So in that way, in any legal way as well, like since this was bootstrapped, all the revenue that was generated is basically owned by us up until the TGE point and the futarchy proposal that we did. After that, now the way it's structured is like 50% goes to the team and 50% goes to the token holders, and that's it. We don't have any treasury as of now, but eventually, there can be a sale of FAF, because FAF is a mintable token, and then that amount can be held in the treasury, which is controlled by futarchy. But as of now, we don't have anything in treasury except the LP of the FAF, which actually we put up voluntarily, to be honest. Like there was no money that no one is LPing FAF, so we basically have put up about $150,000 worth of USDC and FAF into the LP of MetaDAO AMM, futarchy AMM.
Yeah, I think you also mentioned revenue share. I think
Yes.
Flash is one of the only protocols that has revenue share, right?
Yes.
I think a common criticism of doing revenue share is spending the money on sharing the revenue instead of growth.
Yes.
Everybody loves growth. Everybody talks about growth. So why share the revenue instead of putting it back into FlashTrade?
Yes. The interesting part about growth is like the revenue sharing is also a marketing thing if you were to look closely. Like when you are getting revenue from a token, you talk about the token. And when things grow, the amount of money that is being given out to FAF stakers will also be talked about. So essentially, the revenue sharing acts as a marketing thing rather than using that money and doing something directly to market Flash. the what essentially we see it as a marketing spend itself overall. And the question, like, to be honest, like, it also goes back to the question, when we launched FAF, like, we asked ourselves this question, that why would I hold FAF? Like, as a team member, why would I want to hold this token if I'm not getting anything out of it? Like, it does not make sense to hold a token while things are being built around it. So why not make it worthy to hold it? And how do you make it? Is like, give about 50% to the holders. And we recently also did a very, very big change around FAF staking, where now essentially all the supply that is staked to earn revenue, it will only unlock over 3 months period. Like, people cannot unstake it immediately. So interestingly, today, if we were to talk about it, like, about 69% supply of FAF is fully logged for minimum 3 months, if everyone was to get out today. So that is also a very bullish metric overall. You won't find any token that is having this much amount of liquid supply logged.
Yes, 69%. Huh.
Yeah, it's
Wow,
like, it's
that is it's a very good number, and yeah, that's really really crazy. Okay, so I have an interesting question here, which is, if you look back on Flash and how you guys did the fundraising and the revenue share and all, and the ownership coin MetaDAO, would you do anything differently, you think? And do you think your strategy, or how you bootstrap the protocol and all that, do you think that could be applied by somebody else today, like somebody who's just starting a startup in crypto today? Do you think they could go this route?
Yes, they can go through this route, and it's a very, very neat route where you essentially are not selling any part of the company to unknown buyers. And but the problem there would be, like, they need to build something that creates money. That is very important. Like, your company needs to make money from day one. And the most interesting thing about Flash was it made money from day one for all its holders and the team as well. So you need to build something that makes money from day one, and then essentially you can get started without diluting yourself or giving out any tokens, and bootstrap the company and a community around it.
Do you think that is realistic to make, for all startups to make money day one? Isn't that a
No,
little
no,
bit overly optimistic?
no, yeah. Like, it's, see, one thing that we also need to understand is, like, people have sold this idea that you can just use one sort of token economics as one size fit all for all protocols, but that is not true. You, as a founder, or like the builder, needs to understand what's the best route to do. You can't copy paste this thing. It's very important that you fully ideate through the best solutions of token economics that you apply, because that is what will make your company, like, bigger or fail you. Like, right now, what we are seeing with Jupiter as well, is like, the company is epic, the products are epic, but they might have done some copy pasting on the token, so they're having those issues. So essentially, like, that's what we are trying to solve as well. Like, product is product, token is also a product, so you have to make sure you don't make a mistake around your token product.
So, okay, very interesting. You think the token is a product?
Yes.
Do you think we should be looking at tokens as products, as something that, well, yeah, products, instead of, don't you think that competes with the idea that it is an ownership coin, or do these things go together hand in hand, or?
Like, see, as I said, like, the reason why we went with the ownership model is because of the legal structure. It's foolproof legal structure for an exchange. So that is our take. And in terms of token being product, everyone knows that. And, like, if tomorrow, FAF was to go above 200% or 300%, it markets the exchange by itself. Like, it becomes the tool to bring people into Flash. So that's why it essentially becomes a product.
Have you found token holders helpful in that way? Because I guess it creates an army of holders who want to pump their bags, and people who will be loud about FlashTrade and FAF.
Exactly.
Have you
So that's your
experienced
marketing army.
that?
Yes.
Okay, so
That's your
you've
marketing.
definitely experienced that. Yeah.
Yes.
Okay. Very cool. Very cool. Okay, so one last question about this topic, and then we're gonna move on to perps because I think that's also very interesting. Do you think MetaDAO in itself, like what do you think? What would you change about MetaDAO and maybe futarchy? It could be anything from the implementation, the interface, whatever just something that you think could be improved.
Yeah, I think right now MetaDAO is having a bit of a goal, like the goal for it being a protocol for governance or a launchpad. Like there seems to be a bit of no direct direction overall right now. Like from my perspective, as far as I've seen. So see, both things are valuable. Being a launchpad is also a very valuable thing, and being a place to make sure valuable products can use the governance model, and then you can help them to make it more valuable. That is also one direction. And I think right now MetaDAO is split between two, and they are trying to see what works best for them and then accelerate towards that. And I think they have taken the path of being a launchpad. But the sad part about right now is like there are like not many cool products coming out in crypto, especially in DeFi, because I don't know, the markets are kind of slow right now. So the launchpad side of things might not be looking so rosy. But yeah, I think that is what I see from my perspective, and what I think might, like, if I want to change something about MetaDAO is like I can't comment on that, because when it launched, I had no clue that it could have become this big of a phenomenon, to be honest, because it was very hard to understand, and the founders have done their hard job of propagating the idea of futarchy. So, props to them, and I think that sort of energy can, change things for your product. So I can't say that okay, this needs to be done. MetaDAO would become much bigger. So yeah. If I were new, I would be building something like that.
Yeah, okay. So if Colin or Profit is listening, the futarchy propaganda has been successful.
Yeah.
Okay, so let's talk a little bit about perps and the perps landscape today. Over the past, like pretty much ever since Hyperliquid, I would say that was the turning point for perps. I don't know if you agree with that, but I'll let you reply in a second. So I think ever since Hyperliquid came out, you've started seeing perps protocols popping up, and a lot of competition, mainly on other chains, not necessarily on Solana. Like I would say the competition on Solana is also heating up a lot, with a lot of perps protocols coming out soon. So what do you think caused this explosion of perps? Was it, some people would say it's the Hyperliquid airdrop. Some say it is the product itself. Maybe some people say it's institutions finally coming on chain, or people finding out how to trade. What do you think?
Yep. See, the perps thing being insanely profitable is something that we all knew since the launch of perpetuals by BitMEX. I used to market make on BitMEX, and we knew how much the internal desk was making money, and we were really thirsty about it. Like we salivated it how much the company was making money, and then eventually Binance launched their own version, and then we saw DYDX and then Mango on Solana. So the idea of perps being a very huge thing was understood by a lot of people, like at least the industry folks. But what happened with Hyperliquid is like the way they build it by having the specific blockchain with the specific priorities for makers and takers, and having the fastest route to their order book was something that there were like a couple of people were building it, but it was not so it didn't catch that train. And I think the team has phenomenally shipped things at a phenomenal fast pace rate. And being in your own isolated blockchain, having no bullshit on it, and then even now, to be honest, a lot of people don't know this, but Hyperliquid is not open source. Like, you can't verify a transaction if you want to do it by yourself. Although you can do that on Solana, or if it's running on EVM or other exchanges, but you can never verify a transaction on Hyperliquid. And that is what I think helped them to grow bigger, because since they own the box which matches all the trades, and when you have your own specific box with your own specific limitations and your mechanics, and then you get that much amount of trust from the industry, you can scale things. Because there was always this need of non-KYC exchange, because there are people from China, there are people from Korea, there are people from USA, there are a lot of people are there, and they want to trade, and they don't want to go through revealing themselves. Even now, you don't want to reveal your face, right? Even on this podcast. So like you, there are millions of people who don't want to do whole revealing thing. They just want to trade the asset. So the market cap, everyone knew there was this market cap, but they served it best in their closed environment, and they have been serving now, as of now.
So do you think that Solana being so open, or not just Solana, but other blockchains as well, being so open is one of the blockers? So how do you think we could improve this on Solana? What are the steps? I would also say Solana needs to probably get a little faster.
See, one thing that you have to understand is you can never build a exchange that is fully capable of going against NASDAQ on a public blockchain. That is something, it's my view, I might be wrong, but this is something that I have understood after working on Solana for now at least more than 5 years now, and then even working on EVM before. So when you have a public blockchain, and then you have random people running their own clients, and then you have random sort of block times, which creates this thing of you don't know if you're going to land your transaction in the next 400 milliseconds. Sometimes the blocks are more than 600 milliseconds, 800 milliseconds, depending on the client that the validator is running. So that is the reason why I think public blockchains are destined to not work for high performance DeFi. So solution to that is basically your own box that is fully in sync with Solana, so that the second this box goes down, everything can be ported to Solana, but it will be slow, but it will always have this backport to Solana, so that if anyone wants to go out or things go bad with this box, you can withdraw your money permissionlessly. And this is what essentially Lighter is building. We at Flash are also building with Magic Blocks. Bulk is also building. So that is something that I've learned so far.
Yeah, I mean, do tell me about how Flash works in that. So how do you guys, what is Magic Block? I think a lot of people don't know that. I don't think my listeners are very technical. So if you could explain that a little bit further, that I would appreciate that.
For sure. So basically, Magic Blocks is an ephemeral rollup. The sad part about the term rollup is a lot of people have they understand rollup as an L2, but it was not supposed to be that. If you read the white papers where Vitalik essentially introduced the idea of rollups were supposed to be these basically boxes that run in parallel with the mainnet and are fully in sync with the mainnet, so that users will never feel that their money is like leaves their wallet. Like they are fully in control of their wallet, money in a non-custodial fashion. So basically, this ephemeral rollup is something that runs in parallel with Solana. There is no fragmentation. There is no bridging. When you interact with the Magic Blocks rollup, where Flash will be deployed, probably we'll be launching this quarter, is you can essentially interact with your own wallet Phantom. The money will be owned by you. It won't be on a non like custodial box like Hyperliquid or other like Pacifica exchanges, where the thing is you essentially bridge and then interact with your money on that bridged version, and then you think that your money that is on the smart contract on mainnet, it can be withdrawn by anyone. But when you are using the ephemeral rollup stuff, it cannot be done, because it's all like it needs to create an account on mainnet, and that account would be transferred to the rollup. And until unless you have a wallet on mainnet, you cannot do anything on the rollup, and it's always in sync. So essentially, in that way, things can be built in a composable manner as well. So like there would be no state fragmentation. Like the states of Flash on the ER would be fully known on the mainnet. So that is what we are building. It's a very novel tech, to be honest. Like it hasn't been tried till now, and we've been working on it very hard for the past 8 months. And yeah, that is where we are, and we believe that is the best solution to scale things on Solana blockchain.
Okay, so this isn't live yet. So
Yes.
so
We are testing it
when
on right. Yeah.
okay, and when will it go live again?
We are hoping to go live this quarter before the end
Okay.
of Q1. That is March 31st.
Okay, cool.
Yeah.
And how do you think it will square against your competitors? Like, what do you think makes Flash different from everybody else? How does
Yep.
this architecture and this design or the fees, how do you compete, especially with something like Lighter, which has 0 fees, I believe, on a lot of stuff. And like, is that even possible, do you think? Or
Yes.
there's a saying
So-
where if there are 0 fees, then you're probably, you're the
No.
yield.
No. There is this thing where, like, if the latencies are cut off by basically 5 milliseconds to 10 milliseconds, you can offer 0 fees, because essentially the spread and the PNL of the markouts would cover the fees that users usually pay. The fees is just because of the latencies that we have on Solana, to be honest. Like even Flash itself, if we were to offer 5 to 10 millisecond latency routes, we can offer everything that is on Flash at 0 fees, because what essentially like the LPs will make money is from the PNL of the trading activity that happens, and that's how market makers work as well. So and then you can add a rebate structure on that. So having no fees is possible when things are very fast. That is something that a lot of people need to understand. Even on Binance, if you have that amount of volume, they actually offer you money to make the order book. So there is basically no fees when you have that much amount of volume on. Like if you are level 7 and above on Binance, you get fees to market make on Binance. And that's how it's done on many centralized exchanges, where market makers actually make money and they are not charged any money for their volume, for their market making. So that is something that a lot of people need to understand as well. And coming back to how Flash basically would excel is, once we remove this issue of having slowness that is because of the Solana blockchain, essentially, as I said, like we can offer 0 fees trades, and we don't have those issues that we have on Solana right now with the market states, the number of accounts, and even being on the public blockchain, where sometimes the priority fees can go up or down. We never know that. So the expenditure of landing your transactions is being unpredictable makes the experience not good. And by removing that, we make things much more easier, all the while not losing the decentralization aspect. That is very important. And coming back to the point of how we would compete with lighter, is it all depends on how best of an environment you can provide to the market makers with the best in class APIs, and like and a better rebate model, to be honest. And then what everyone essentially wants is more traders. So if an exchange has more traders, you would easily attract those market makers, because with the expansion of Hyperliquid, there are now more people who want to try out or market make on-chain avenues. Before Hyperliquid, people and a lot of bigger market makers were more hesitant to do something on-chain, because there was no predictability, and people had to pay money to land the transactions. That is like an unheard thing for people who market make, like, because all they do is just put their orders through an API. They don't even think that, okay, this thing would pass or not. Like, it should pass all the time. Like, it should basically land. Like, this part of thinking that when you click the button, your transaction might land or not, is something that is very archaic experience. So removing that experience and then offering an environment that is very same to what you see with the centralized exchanges, without losing the aspect of decentralization, is how you can win the whole business of being an exchange. But what you also have to understand is there will never be one winner when you are running an exchange. You will always have multiple places and multiple jurisdictions and multiple geographies that like the taste of exchange. So I don't like this way of, like, people think like, okay, only one guy would win everything. That's now how any industry works. You'll always have a number of companies, and then those companies will basically try to fight against to become the number one. So yeah, that's my answer. I think I took long. Yep.
And do you think, with all the hype about Alpenglow, MCP, BAM, and all the block builder wars that's happening now, do you think any of these changes could help with this issue with Solana? That
it's not an issue. Like, I don't want to term it as an issue. It's basically how public blockchains are built, and they are not like, they are supposed to do things. One thing that is very important is, like, they need to verify the transactions and make the state recognizable around the world. That is very important. Now, the way we are building the solution for FlashTrade is, like, it essentially scales with the underlying upgrades of Solana. So tomorrow, if Alpenglow comes and things become more faster, it basically boosts our thing that we are building on Solana itself, because we are using Solana as our foundation. So the fastness of Solana actually accelerates our ephemeral rollup as well, because now what we do is essentially, like, everything that happens on this ephemeral rollup, it's always verified in 400 to 800 milliseconds, depending on the leader accepting the transactions that we sent to the mainnet. And as things get faster, it essentially makes the block that is over Solana, that is Flash's exchange, it starts accepting transactions downstream much more faster, which makes it more resilient and more decentralized. So that is why we have chosen this path. That we are very happy with what Anza is doing and the path that they have laid to make things faster. And that is the reason why we are building it on top of Solana. We are not leaving Solana. We are building on top of Solana, and every state change that we're going to do will be always be in fully sync with the mainnet itself. So the faster the mainnet goes, the faster things happen. Like, the better it happens, better it's for Flash overall. Because we don't want to bet against them. We are not going to bet against them.
Yeah, you don't want to bet against Anza.
Yeah.
You never want to do that. Okay. And I think one last topic that I want to touch on is FLP. I think FLP has really good yields, and I've been watching it, and I've been seeing a lot of people shill it, uh, but I don't think I've ever really understood where the yield comes from. How does this work? And why are there many options? Which one I could choose? Is it basically like an asset basket or
Yep.
yeah.
So, yeah, FLP is basically an index which market makes on FlashTrade. So the index, if you take an example of FLP1, it's an index of Solana, Ethereum, Bitcoin, Zcash, and USDC. So it as an index which market makes all these markets, and all the fees that is generated from these market making activities, 70% of it is given back to the LPs as fees, and the people who take positions in terms of like perps, the PNL is directly reflected as well. So basically this index acts as your exposure to crypto markets while market making the perps. And over a long period of time, if you check the same index of those assets versus FLP1, FLP1 basically outperforms that base index of base assets, because FLP1 has been accruing all the fees from the perps market making. So if you are bullish on crypto and Bitcoin, Solana, FLP1 makes a very best case for people to put their money in to get the exposure of the markets they like, while having much more risk averse downsides. Because Solana, it crashed about more than 45%, but FLP doesn't go that low as Solana, but it gives you the exposure of Solana while making sure you outperform the price action of Solana, Bitcoin, Ethereum.
Okay. Gotcha. I think yeah, that's a good explanation. I think I get it now. Maybe I'll pick up some FLP right after this. uh, yeah. Do you have anything else you want to say before we wrap up this episode? Any shout outs or any topics that, you know,
Yep.
maybe been on your mind?
I think the most important thing that has been on my mind is like the confidence around tokens is broken. Like people have now zero confidence in tokens, and crypto itself has become very. It's a sad state that people are not having that much confidence in holding or betting on companies, and everyone has this thought that okay, you might get dumped on, or you might get that people might exit on you. So that psychology and mentality needs to change if we want to become bigger than where we are, especially in DeFi. So that is something that we are also trying to answer by taking very different directions with the token FAF. And then things, you just need couple of good uh, teams to do good things, and then essentially if it all works out, everyone will start doing that. So that's what we're trying to do.
Nice. Okay, I think that's a perfect monologue to wrap up the episode. Thank you, Anas, for joining us today. And for anybody tuning in, thank you for listening. And I also want to give a shout out and thank you to MetaDAO for sponsoring the episode. And I guess I'll see you guys in the next episode.